To learn how to properly analyze the market bias and the direction where the market is heading is paramount to any trader. And in price action, there are certain rules that we can use to help us predict where the market is going and to help us make sense of the overall market structure. Because especially if you're a novice trader, it is quite difficult to look at the structure like this and understand what the market is going to do or where the market is heading. So according to price action, there's a reason to every single price movement, and there's always a pattern working. So now that I can see that today's session started with series of lower highs, lower lows, which is a bearish downtrend, I naturally need to identify a pattern because these candles are never alone and naked on the chart. So if I'm just going to connect the first couple of swings, notice the geometric formation of the highs are allowing me to predict a safe trend line. I'm just going to copy it, put it at the bottom. And also this 21 bar exponential moving average, the supportive indicator, is rejecting prices every single time. So this is important because right now I have a downtrend working to the downside, and according to price action rules, I expect for prices to create new extreme after we break the downtrend. I'm not expecting reversal just yet. So the bias right now that I'm expecting is bearish. I expect new extreme to be retested by the traders, this lowest extreme, and in price action, the bigger pattern takes precedence. So I'm not too worried about this bullish correction. I'm treating this as a correction because this was the main pattern the session started with, the main structure, and it's going to take precedence most likely. Okay, however, I can see that the prices are strongly reversing against my direction. However, what I'm going to do, I'm going to measure the first leg, copy it, and project the measured move, because price action likes to move in pairs of twos. I am not looking for wider channel just yet. Why? Because the bigger pattern needs new extreme and the bigger pattern takes precedence. So I'm treating this as a correction only, and the bias in this market is still bearish given what happened at the very beginning of the session. Notice measured move was reached and prices are correcting a little bit. However, we have retraced around 60% of the initial uptrend, and this is the breaking point, and this is the important part where you're going to have to pay attention how the EMA is going to react, because this was quite a substantial move up that makes you doubt the initial downtrend if you're truly going to make new extreme. If EMA is going to hold here and you're going to break the latest highest high, you need to adapt, you need to switch the gears, and you're going to start thinking bullish because there's a bullish pattern working. However, if the EMA is not going to hold after the larger two-legged pullback and you're going to push below, this will give you a hint that you're most likely going to reach the new extreme for the initial bearish bias. So all you have to do is be a little bit patient here, and you have to observe what the EMA is doing. And I can see that the prices are pushing strongly below EMA. Okay, so this is great because this is right now confirming that this was just a larger two-legged pullback. The main bias still is bearish, and I'm expecting right now to reach the new extreme, and I'm looking for a high probability setup. And notice we have new low, first entry short, pullback, second entry short. There's also a micro break, new high. So I don't want to sell anywhere on the chart. I need to sell high probability setup, and this is a high probability setup because it is a two-legged pullback, second entry short at the EMA at the key entry point. Great signal bar, but also not only second entry short, counting from this high, it is a first entry long pullback, second entry long failure. So two high probability setups in one, which is always a stronger sign than just a one high probability setup. There's a first decent high probability setup for the day, second entry short for second entry long. You expect new low, and the bias is bearish. So you can see now that you know how price action moves, it's starting to make sense. This channel needs new extreme, and you know price action likes to move in pairs of twos, and you have two separate legs up. So it's just a correction, and once you push below EMA, you're expecting the resumption. So suddenly it makes sense to what the price action is doing just by following the price action rules and how the market behaves. So at first, when I was watching this, I even drew my channel larger because I expected for prices to reach new extreme. So let's see what's going to happen. Okay, we are breaking to the upside, so I'm going to redraw the uptrend. We're above EMA, I can't sell just yet, uptrend is in play. We have a lower high confirmation setup, but it is a pure doji right at the EMA after big bull bar, can't take it, neutral doji indecision. The market keeps working. I was even looking for possible triple test to sell some decent setup here, but there was never trigger, no good signal bar. It just kept pushing higher. And notice market keeps stalling a little bit. So this is the first leg up, pullback, second leg up. Once again, market likes to move in pairs of twos. We're breaking lower. Are we going to reach new low? And we're pushing back above EMA. Okay, so something is changing here. Notice we are struggling to reach the new extreme. EMA is starting to flatten a lot, and we have a lot of price swings up and down, up and down. So once I see EMA flattening, getting in the middle of these bars, and a lot of price swings up and down, this is indicating to me indecision, consolidation, and this is a trailing range structure. So what I need to do is identify my key levels for this tight trailing range. You can see how clearly a range-like structure this is. And this is now getting quite confusing because we're overall starting to get very stacked. No room to take a setup. It's quite unclear. You're just in the middle of no man's land. And this is the situation where you just have to be patient. You know, you can see how everything is getting too clumped up. Nothing is clear here. So just be patient. Let this do its thing. You can even see there's a trend line to the upside because we have continuous high lows. EMA keeps holding. Once we see breaking lower, I was looking for felt second entry long to continue working lower, which never formed. Attempt to create a new high for this uptrend, and we're pushing below EMA again. So what is my bias at this point on? The bias still remains bearish. We haven't reached new low for the downtrend yet. We are just stalling, and now that we're coming off the range highs, we're pushing below EMA, which is confirming the bearish momentum. I'm still expecting new low, and I'm looking for felt second entry long. Can we get a felt second entry long? We cannot. We just get lower high that is far away from EMA, and market just keeps pushing lower. Okay, so at this point on, I'm gonna make my channel wider. Why? Because I expect for prices to reach the low of the day, where the new extreme should be tested. So I'm still expecting for prices to reach the new extreme. Strong push below EMA right now is confirming the bearish bias. On a higher time frame, this is just one big leg, two-legged pullback, so I expect the second big leg down. Overall bias is bearish. Notice how nicely the channel is fitting, and I'm looking for second entry short at the EMA at the key entry point before we're going to reach new extreme. Can we get it? We already have a breaking low, so this is a little bit concerning. Now I have to be a little bit more careful when I'm taking short setup because this tight channel already has a break new extreme. However, I still expect the bearish bias to continue. It just means I would need to take a stronger setup. However, notice what is happening. Just a bunch of first entries and market continue working lower. So I don't even have to worry about anything, just a bunch of first entries. So no high probability setup on the way down, no two-legged pullback. I just have to sit here and watch market go lower. So finally, the market created new extreme. According to rules, what does it mean? That we expect correction or possible reversal. Because the downtrend fully played out according to rules. This is a range-like structure. There is no longer going to be a continuation. So let's now see what's going to happen. If I expect right now bullish resumption, can I just buy just randomly at this particular time? I cannot. Even though it worked in hindsight, you can never predict when you're watching this live the exact spot when the market will pivot. Okay, you can go long here, you can get stopped. If you want to predict the market reversal, which in this case it makes sense because downtrend played out and you're pushing strongly above EMA, you can't just buy randomly the low. You want to wait for reversal pattern. Reversal pattern is characterized by two failed attempts in previous trend direction. Previous trend was bearish, so two failed attempts would be two failed second entry shorts. Okay, let's say failed second entry short one, like two attempts to sell. So the failed second entry short, the trend has to have a new extreme, which it has, and it needs to form above the EMA after push above EMA. So notice, we're pushing higher, we have new low, first entry short, pullback, second entry short, failure, and this is the reversal pattern. Felt second entry short. EMA keeps holding, downtrend played out, and this is a sign that the market will reverse. The second attempt to sell, all the late sellers are gonna get trapped because the downtrend already played out. You have no reason to look to sell, you're above EMA and the EMA keeps holding. This failed second entry short is gigantic, you cannot really take it, but context wise, reversal pattern, and notice market keeps pushing higher, which means I need to redraw my channel wider because this tiny little channel cannot take into consideration this entire structure. It's not proportionate. We have an uptrend. I cannot buy so far away from EMA. I'm far away from key entry point. I just need to wait for a pullback and notice small consolidation. We have a new high, first entry long. So what am I expecting right now? I'm expecting second entry long because the trend is bullish. I am at the key entry point. I'm at the EMA. So according to rules, we're going to move higher. Can I get second entry long? I have second entry long. Notice EMA keeps holding, the small support keeps holding, but look at the signal bar, bearish body. The signal bar is not indication of a strong bullish pressure. Even though context-wise the second entry long is great, the signal bar is quite bearish, strong bearish, so I can't really go long unfortunately just yet. It is a shame because it ended up being a great setup, but I can't really go long just yet given the signal bar. I can actually make it a little bit wider because the break was so tiny. This trend line still fits pretty well. Downtrend keeps working lower, and we're back above EMA. No way for me to enter. And notice market created new extreme. So okay, break a new high. So I'm just gonna observe the EMA, and prices are breaking below EMA again. Okay, so once again, follow the trend line rule. You can see there's a reason to price movement. This uptrend has a break new extreme. What is the overall structure? Even though you have some trends inside of this structure, it is not a strong trend day by any means. There's a downtrend followed by uptrend. A lot of price swings up and down, up and down. So the net change of this entire price movement so far is basically zero. It is a trend range, which means I'm not expecting continuation of this uptrend. I'm not looking for any wider channel. We have a break new high and we're pushing back below. So just like here, it makes sense for us to expect reversal. Here, you're pushing below EMA, so it's reasonable for you to expect for market to change the direction and for bearish downtrend to start. Once again, you shouldn't just pick randomly the top. You're supposed to be waiting for a reversal pattern. And notice, just like here, you have new high, first entry long, pullback, second entry long failure. At the EMA, at this resistance, it's confirming the seller's pressure. This is a failed second entry long, reversal pattern, high probability setup. So this is how you identify that the market is going to change the direction. You safely wait for a reversal pattern, and you don't have to be too worried that you're not picking the exact bottom or exact top, because you can never predict it safely. You can see if you sell here, sell here, sell here, you're going to get stopped. Only if you push below and get a nice reversal pattern, then that's a safe indication that the market is changing the direction. You can see we're pushing low, so I'm going to make the channel wider because I expect for prices to continue creating the low of the day, reaching the low of the day, excuse me. Notice the channel fits nicely, so I don't have to be too worried that I'm drawing this channel wrong. I don't have to doubt it. It is a nice fitting channel. I'm expecting to get a high probability setup, and notice we're finally breaking the channel. So that means I expect new extreme. Simple price action. I'm going to take a high probability setup. I have a first entry short. I cannot take just a first entry short. I expect second entry short, and we have second entry short. Second entry short, high probability setup at the EMA. We expect new low, but notice the signal bar. Quite neutral, quite doji-ish. It has a decent bearish body, but the signal bar also has some decent bullish stem at the bottom. So aggressive trader can definitely go short here. Context-wise, this is a great setup. Just like here, the signal bar, however, is not that great. The context, a lot of times, is more important than signal bar. Yes, decent setup context-wise. Study this setup, just the signal bar was not great, but you can see price action is flawless and created new extreme. So once again, we have new extreme. And given how slow the market is and how rangy it was, I'm going to pause my short setups. I would need to see consistent EMA rejections, lower highs, to expect they were going to reach the low of the day, because we're quite far from it. We're still in the middle of trend range. So I'm pausing my short setups, and notice we're pushing above. So what I have to do immediately, we draw a brand new channel, because I'm going to use once again the first two swings. We're pushing above EMA, and we have failed second entry short. The failed second entry short here would be great. Once again, break new low, downtrend played out, new low, first entry short, second entry short failure. Above EMA, had this closed right at the EMA, would have been great. But notice the gap between the EMA and the signal bar. It's quite far from it, so don't really like taking this. It worked nicely. You can see how strong the setup is, but unfortunately it didn't form close to the EMA. I have a new high, first entry long, pullback, second entry long. I have a second entry long right at the exponential moving average. Uptrend is to get new extreme, decent high probability setup. The signal bar is strong. You have 2 micro legs down. Now, you don't have to be worried too much about the shortened channel. It is a legitimate worry to have, but notice how tiny the correction was, how close to the channel it is, and how strong the bullish momentum here is. You know, something is telling you that you're gonna create a scalp to new extreme. The trend line is tight, so you're most likely not gonna have stronger correction. Decent, more aggressive setup. You can see market created, attempt to create new high, and now reverse lower. Okay, break new low, and notice what is happening. Just like earlier, flat EMA, consistent price swings up and down, up and down. So what I have to do, I have to adapt to a different structure now. I'm trading a tight trading range at this point. So once again, it's starting to be congested, indecision. The support keeps holding. Can we get some failed second entry short? It's too big, break new high, it's too late, can't really take it. Okay, market keeps just going sideways. You're in the middle of trading range, inside of the main trading range, so this is really confusion. We're not gonna touch it. Notice I'm drawing these channels tight. Every single time you break new high, break new low in tight trading range like this, you expect market to pivot at the key extreme. So you're at the lows, you're at the highs, you can see break new low, market is pivoting. Okay, we're breaking higher, so I need to redraw my channel. Notice, you have a channel. Can I fade the breakout? I cannot fade the breakout because this is too steep. It still looks like part of one big leg up. I cannot sell the breakout just yet. Also, you're close to this main resistance. A lot of times when the short-term resistance is close to the main one, you're going to reach the main one. So this is too early. Once it looks like one steep leg, I cannot take a sell just yet. And notice, the market created tiny little break, new extreme. So I'm going to mark the new extreme. We're pushing below EMA. Okay, so this is right now confirming the bearish bias. And notice, new high, first entry long, pull back, second entry long. So this right here is a failed second entry long. After failed breakout, the main resistance held, strong push below EMA, great high probability up. You're back below this initial trading range. Notice the buyers are getting trapped, EMA keeps rejecting. So you can see strong push below the EMA and the main resistance keeps holding. You pull back into trading range. The market keeps working lower. Okay, we have a close outside. So we expect for prices to get new extreme. We have a second entry short, but it's above EMA, doji bar, can't really sell. You can see great indication that you need to be patient because you pushed above EMA and the signal bar was doji, horrible. You cannot sell. You have a double trap and a visual two-legged pullback. But double trap never triggered. You can see there was no trigger below this bar. Inside bar it stalled. It's getting a little bit congested. And market kept pushing lower. Created new extreme. You're breaking this trend range. You're pulling back above. I'm going to redraw the channel. Okay. You're back inside of this trend range. We have a new high, first entry long, second entry long. But I'm going to redraw my downtrend here. And we're not fully touching the EMA. Oh, there was no even trigger anyway. That's good. You can see new high, first entry long, second entry long. But we have a downtrend in play. Don't really like going long just yet. It ended up failing. If you actually took this long right here, let me see. I'm going to zoom back a little bit. This is not a bad setup to take a chance. New high, first entry long, second entry long. The downtrend is in play. But I am going to mark it in case you took it because it is not a bad setup to take a chance. It is definitely reasonable because EMA keeps holding. This uptrend needs to get new high. You're at the key entry point. Just the fact that the downtrend was in play and after such a big spike, you know, the correction came a little bit stronger. So here you can ignore the downtrend a little bit because everything is so tiny and this bullish channel is tiny and this was a micro 2 legs down. But here it's completely different. Massive push up. It doesn't look like 2 micro legs down. It's a little bit too, more bars are here and the correction may be stronger. So for this reason, I respect the downtrend. But if you took it straight like here, definitely okay, so take a chance. It ended up being a losing trade. You're not too worried about this. It's part of trading. You're gonna get it back on the next one. And you actually have a high low. But the high below is doji. The shame this high low didn't form well. You can see it ended up working. and market created new high, and I believe it's too late. Yes, it's too late. There is no momentum. We can see new high for central and second entry long. So you identify the direction where the market is heading by looking for the main patterns for the channels. You're following the trend line rule. You can see big downtrend, two-legged pullback, bearish bias after new low was reached. Only then the bearish bias is shifting. If you get a reversal pattern, it's shifted into bullish. However, overall, the main pattern developed as a trend range, so you cannot be too greedy to expect the trends to continue. You need to be quite quick on your feet to accept that the trend played out and for you to switch the bias, because if you are in trend range, you know, the market is going to pivot most likely. So break new high, another reversal pattern, and now we got, you know, really slow. This is tough. You should be not even looking for setups here. It's just not worth it. You can see there are a lot of setups without a congestion or without indecision. And once again, small trend range, the main resistance held, strong push-pull EMA, felt second entry long, after fell breakout, back in the trend range, larger two-legged pullback, which didn't form really great. Market continue pushing lower, and then you can see back above, and market continues working higher. So I hope you find the video helpful, educational. I'm going to see you guys in the next one. Good luck with your trading.